Good morning, students. Welcome you all once again in the live virtual revisionary classes of Board of Studies of ICAI. Friends, today we are going to revise few complex questions, different questions on two standards, which is Ind AS 16 on property, plant and equipment and Ind AS 23 on borrowing cost. Friends, as you all are aware, the asset-based standard, whenever you look at the asset-based standard, liability-based standard, these standard covers four aspects of any item of the financial statement. Okay. So can you tell me which four aspect of the which four aspects of any item in the financial statement?
RMPD. Good morning.
Yes. Good morning, Saminathan. Yes, RMPD. So these covers recognition, measurement, presentation, and disclosure of any item in the financial statement. Like Ind AS 16 on property, plant, and equipment talks about the recognition of an item as a property, plant, and equipment in the financial statement. For example, if a company has purchased a car, whether car is required to be expensed off or car is required to be recognized as a fixed asset, as a property, plant and equipment in the financial statement, right? So Ind AS 16 talks about the recognition criteria of that item, okay, if it has to be recognized as a PPE. And it talks about that PPE has to be recognized. An item is required to be recognized as PPE if two conditions will be satisfied: future economic benefit is probable and cost can be measured reliably. So it talks about recognition criteria. Then measurement, how the PPE is going to be measured, right? Once you establish, yes, it is a PPE, how it is going to be measured? It has to be measured at cost, right? And what is the meaning of cost? Cost includes purchase price plus import duties plus non-refundable taxes. Like if GST is non-refundable, if input cannot be received on GST, it will become part of the cost of the fixed asset, minus trade discount and rebates, plus directly attributable cost. What is meant by directly attributable cost? If that PP would not have been purchased, this cost would not have been incurred. Number one. Number two, this cost is necessary to bring the asset in the location and condition necessary for making it available for use. For example, you have purchased a machinery from China. So if you will not incur transportation cost, is it possible to get the machinery from China to India? Answer is no. So transportation cost is a directly attributable cost, means if I would not have purchased the machinery, I am not required to pay the transportation cost, right? Second, transportation cost is mandatory. It is necessary to bring the machinery from the manufacturer's site in China to Indian factory. Okay. So this transportation cost is going to be capitalized as a cost of property, plant and equipment, plus decommissioning cost. If there is a decommissioning cost, the present value of the decommissioning cost is also going to be capitalized as a part of the cost of the fixed asset. If you have seen my video, my YouTube, my classes on Ind AS 16, I used to take an example from telecom industry, tower industry, right? So friends, it talks about recognition, it talks about measurement, it talks about subsequent measurement at cost model, revaluation model, okay, right? It also talks about presentation and it also talks about disclosures. So these are the four aspects every standard touches when it talks about any asset liability, okay? So what is recognition, measurement, presentation, disclosure? Likewise, Ind AS 16 also covers these aspects, okay? So friends, now let's begin the journey of Ind AS 16. I am not teaching you the entire concept of Ind AS 16 because this is not a conceptual class. This is a practice class. This is a practice session, okay, where we'll solve some questions and definitely through those questions, whatever concept is related in that question, inculcated in that questions, that I will discuss, I will brief and I'll explain. Okay, sounds good? Right, Saminathan?
Yes, sir.
Right.
Perfectly said, sir.
I hope this is okay, Geeta.
Yes, sir.
Yeah. So friends, let's discuss question number 1. Okay. I hope the question is perfectly visible to all of you.
Yes, sir.
Yes, sir.
MS Limited has acquired a heavy machinery at a cost of rupees 100 lakhs, means 1 crore, with no breakdown of the component parts. So what is the cost of the machinery? The cost of the machinery is 1 crore. And when this company got the invoice, what is written on the invoice? Simple machinery. And what was the value? 1 crore. That's all. Estimated useful life is 10 years. I'm reading this question like a student. Okay, 1 crore is the cost of the machinery. Estimated useful life is 10 years. What does it mean? It means every year, what could be the depreciation?
1 lakh.
10 lakh.
10
1,
lakhs.
1 crore divided by 10, 10 lakh rupees, the
Yes,
depreciation.
10
Okay.
lakh.
At the end of the sixth year, one of the major component, oh my God, major component, one of the major component, now something got, something got triggered in my mind. One of the major component, we have heard about this major component concept in India 16. What was the concept of major component?
Componentization, we need to capitalize separately.
Yes. So major component means, so if we have to follow component accounting, right? So if there is any PPE, if there is any asset, property, plant and equipment, which has a major component, that major component needs to be capitalized separately. And once that major component will be replaced, what will happen? That the WDV of that major component needs to be derecognized and the new component needs to be capitalized. Right, Geeta? Yeah?
Yes, sir. Yes, sir.
Yeah. So at the end of the sixth year, one of the major component, the turbine is a major component. Okay. This require replacement. Why? Because the further maintenance is uneconomical. So total life was 10 year, cost was 1 crore, no breakdown was available. But when this company reached at the end of the sixth year, they found that the turbine require replacement. Why? It is a major component and it got damaged and the repair and maintenance cannot be possible. So friends, tell me, up to sixth year, at the end of the sixth year, what is the quantum of depreciation which has already been charged on this machinery? What is the accumulated depreciation, Geeta?
It's 60 lakhs.
60 lakhs. Very good. 1 crore was the cost. 6 year has passed. 60 lakh depreciation has already been charged. Okay. Now, in the next line, the remainder of the machine is perfect and is expected to last for the next 4 years, except turbine. The remaining part of the machinery is absolutely okay, and this machinery will live a good life, healthy life of another 4 years also. The total life was 10 years, 6 years has already gone, and the next 4 years, this except turbine, the remaining part of the machinery is good to go with. The cost of a new turbine is 45 lakhs. The major component cost is given. The cost of a new turbine. New turbine means when we are going to replace this turbine, the cost is given. And I don't know why the discount rate is also given 5%. Analyze whether the cost of the new turbine can be recognized as an asset, and if yes, then apply the accounting treatment relevant to it as per Ind AS 16. Friends, when this question will hit you in the examination, when this question will hit your question paper in the examination, number 1, will you able to quickly identify this question relates to Ind AS 16? Nowhere it is written that Ind AS 16, but if you have attended your conceptual classes very well, if you have if you are aware about Indian accounting standard, you will be able to know, talking about machinery, depreciation, major component, this belongs to Ind AS 16, number one. Number two, it talks about major component, okay, means there is a concept in Ind AS 16, and this concept talks about two aspects. Aspect number one, when an item will be recognized as a PPE. What are the conditions for recognition in Ind AS 16?
Uh, there should be a problem of the future economic benefit, plus cost should be measured reliably.
Yes, future economic benefits should be probable. If you are using the asset, you purchase a car has a long life of 10 year, 15 year, right? So if you are expecting I will receive the benefit of this car only in next 5 days, will you capitalize that car? Answer is no, right? Because you are expecting future economic benefit in future for a longer period of time, right? Number one. Number two, cost can be measured reliably. You are reliably aware about the cost. Friends, this is for the new item. What about the subsequent cost? Means there is already, you have purchased a machinery already. Now you are replacing a major component. So this machinery is already having a turbine, right? So this machinery is having two aspect, two component, turbine and other than turbine. So tell me, at the end of the 6th year, when the new turbine has to be fixed in this machinery, when the old turbine needs a replacement. So question number one, whether the cost of the new turbine is required to be capitalized. Answer is yes. Why? Because Ind AS 16 says that for subsequent cost. Ind AS 16 says that if in case of a subsequent cost is going to be capitalized, going to be recognized as an item of PPE if two conditions will be satisfied. What are the conditions for subsequent cost? Same condition. Same condition for initial cost. सेम कंडीशन ऑफ इनिशियल कॉस्ट. जो इनिशियल कॉस्ट की कंडीशन है वही सब्सिक्वेंट कॉस्ट की भी कंडीशन है. व्हाट इज द कंडीशन? फ्यूचर इकोनॉमिक बेनिफिट शुड बी प्रोबेबल एंड कॉस्ट कैन बी मेजर्ड reliably. So in this case, cost is measured reliably. We know the cost of the new turbine, which is 45 lakh. And tell me, Geeta, if this new turbine would not have been replaced, whether this machine will be able to function?
No, sir.
Answer is no. So by putting the new turbine, what will happen? Future economic benefit is probable, at least for the next 4 years. So this subsequent cost is going to be capitalized. So Geeta, there was a machinery, and now I am saying that new turbine is also going to be capitalized. So whether this single machinery will have two turbine in the books?
No, sir. Old machinery, this machinery is discounted for 6 years.
No, so basically, when we purchased a machinery, this component was part of the machinery, right? This turbine component was part of the machinery. Now, at the end of 6 year, this turbine component is not functional, but yes, it is part of the machinery. So when we purchase a new turbine component, we will capitalize. So now I have two turbine in one machinery in my books of accounts. So what I'll do, I will de-recognize the old component. But am I aware about the value of the old component?
No, sir, but discount rate is given, no?
Yes, so I am not aware. So first of all, standard says that you have to de-recognize the WDV of the old component. But for WDV, for arriving at a WDV, you should be aware about the gross block and accumulated depreciation. You should be aware about the cost of the component also. But cost of the component is not given. No breakdown is given in the invoice when the asset was purchased in the beginning. So standard says that in that case, what you can do? You can use the cost of the new component as an indicative price to reach at the price of the old component. Means if today I am getting a new turbine at 45 lakh, What happened 6 years back? What is the value of 45 lakh if today the value of 100 rupee is 100? Whether it is having a same value 6 years back also? Answer is no,
Yes.
because of time value of money. Okay. 6 years before, if I would have invested 60 rupee in my bank, every year I'll get an interest. So that 60 rupee invested 6 years back will become 100 rupee after 6 years, right? So it means what I should do? I should discount. 5% discount rate is given. I should discount this 45 lakh 6 years back, and whatever present value we will get, the present value, that present value will become the value of the old component, value of the old component, okay, value of the old turbine. And then what I'll do, then I will depreciate and then I will derecognize. So should I solve this question on the Excel file to give you the entire clarity?
Yes, sir.
Yeah, Geeta?
Yes, sir. Yes.
Sure. Okay. So let me share my Excel file quickly and let me quickly discuss this question. This question was also part of my conceptual class as well. Okay. Yeah. I hope my Excel file is visible to all of you.
Yes, sir.
Is it visible?
Yes, sir.
Yeah. Question number 1 of Word file. Okay. Yes. What is the question number 1? So first of all, cost of machinery is given. What is the cost of machinery? 1 crore, 100 lakh, 100, 1, 2, 3, 4, 5. Geeta, how many zero is there in 1 crore? Crores में कितने zero होते हैं? 7. 7 zeros. Okay. Cost of machinery, cost of then life of then useful life, 5 years. 5 years.
No, sir, 10 years, sir.
Okay, 10 years. Okay. 10 years is the life. Then cost of new component, right, which is turbine. What is the value of the cost of new? What is the value of the new component?
45
45
lakhs.
lakh. 45 lakh. Okay. And replacement is at the
End
end
of
of
6
6
years.
years. At the end of 6 years. Discount rate is given.
5%.
Discount rate is what?
5%.
Is equal to 5%, right? Now, so this is cost and no breakdown of the value of the component, right? Yes. So friends, now, first of all, what is my gross block? This is a machinery, okay? Here I'll write as a gross block. Shall I write as a gross block or cost? You guys are okay? Accumulated depreciation. Accumulated depreciation. And then my net block. So one thing I wanted to clear to all of you, doesn't matter in your exam whether you are writing cost or you are writing gross block, don't worry, your number will not be deducted. Okay. Only due to these things, right? Now you are not a kids, you are not a child. Now you are a mature professional. You guys are chartered accountant, right? So examiner will not deduct your number just because whether you have written as a cost or a gross block. Okay. What you do, that matters. What you have written, right name, wrong name, there is nothing called right or wrong, right? So what is my accumulated depreciation at the end of the 6th year? What is my accumulated depreciation at the end of the 6th year?
60
Up to
lakhs.
6 years. So how will I calculate accumulated depreciation? This divide by 10 multiply by 6. This is my accumulated depreciation. What is my net block? What is my net block?
40 lakhs.
Net block is my 40 lakhs. Okay. My net block is 40 lakhs. Okay. This is my net block. So one thing is very clear. Till the end of 6 year, 60 lakh rupee has been already charged to P&L on account of depreciation. Right? Now, the time has come for the actual accounting of this question. At the end of 6 years, this machine require this turbine require replacement, component require replacement, right? So now we need to arrive at a value of, so we need to derive the cost of the old component at the time of initial purchase. So how will I arrive? The cost is not given. How will I arrive? I will use the cost of new component, discount it to the beginning, and then I will arrive at a present value. Correct? Perfect. I will arrive at a present value,
Yes.
right?
Yes.
Yes. So present value of new component cost, right? 6 years back. 6 years back. कैसे कैलकुलेट करूं? Yes, equal to 45 lakh divide by 1 plus 5% is the discount rate to the power 6. This has given me what? This has given me the present value of 45 lakh 6 years back, 33,57,969, right? In your study material, in your RTP, in your ICAI material, this might be rounded off in the nearest thousands, nearest hundreds. Sir, should we round off near 100, near 1000, actual number, whatever you want to do, please do, right? So what you can do, you can round off to the nearest 100. Okay. So in this case, when you round off to the nearest 100, what will be the value? Round off to the nearest hundreds. What will be the value? क्या वैल्यू होगी? 33, 57, 58,000, right?
8,000. Yes.
33, 58,000. I hope I'm right. Right?
Right.
So now I will split the calculation. Now I have to de-recognize. So I got the value of the old component. Now at the end of the 6th year, I have to capitalize new component. I have to decapitalize old component. So again, particulars. Again, I'm doing a calculation. So now I'm doing two things. So first of all, old component, turbine, or instead of writing old component, let me write turbine component. Okay, let me write turbine component. Turbine component. Okay, let me write turbine component. Okay, and other than turbine. So one thing is very clear. My total machinery cost is 1 crore. Accumulated depreciation is 60 lakh. Net block is 40 lakh, right? If I need to break this 1 crore between these two, how can I break? Now I got the value of the turbine component, 3358. So what is the value of the rest of the machinery? What is the value of the other than turbine?
66 lakhs 42,000.
1 crore minus this thing, 66 lakh 42,000. Correct. Yes. Now I need to compute the depreciation, also accumulated depreciation at the end of the 6th year. I am doing this calculation on the Excel file, right? The company is not required to change their last 6-year numbers. No, right? These calculations are happening at the back end and the Excel file. So what is my accumulated depreciation? Simple. The total should have been 60 lakh only. So this divide by 10 multiply by 6. This divide by 10 multiply by 6. And what is the total? The total is coming out at 60 lakh. Let me do the total also. ये 60 लाख ही आएगा, आएगा ना 60 लाख, क्योंकि टोटल तो 1 करोड़ ही है, तो इसका 6 years का भी डेप्रिसिएशन 60 लाख ही आएगा, राइट?
Yes, sir.
Whether the total of the net block will match with 40 lakh? Of course yes, of course yes. इसका भी 40 lakh आ गया, correct? Is that clear? So now I have the net block of my component which is going to be decapitalized. Now, what is the accounting entry I will pass? What is the accounting entry I will pass? Accounting entry for derecognition of old component and capitalization of new component. So derecognition of old component. What is the accounting entry? What is the accounting entry? To turbine component of machinery, right? To turbine component PP credit. And what is debit? Loss on replacement of component debit. What is the value? The value is 1343,200. Or what you can do, you can also alternatively pass an accounting entry, gross block credit, accumulated depreciation debit, net number will come as 1343,200, right? Geeta and Saminathan, is that clear?
Yes, sir.
Yeah.
Yes, sir.
Alternatively, what accounting entry you can pass alternatively? Alternatively, you can pass an accounting entry with what? Turbine component, to turbine component credit. Credit with what? Which value? Credit with gross block. Credit with gross block. And what is my gross block? 3358. Then accumulated depreciation on turbine. You need to debit, right? Debit, credit. What is my debit? Debit is my 2014,800. So where the difference will go? Simple. Loss on replacement, debit. What is the difference? Balancing figure, this minus 1343,200. So alternatively, you can also pass this accounting entry, right? This or alternative accounting entry. Is that clear? Whether this entry is clear? Yeah.
Yes, sir. Clear, sir.
Now, so this is the derecognition of old component. This was the derecognition of old component. So this was a derecognition entry. Now recognition entry. Recognition of new component. What is the recognition of new component entry? What is that? New turbine, or yes, new turbine component. PP, debit. What is the value?
45
What is the
lakh.
value? 45 lakh is the value. To what? To bank. पेमेंट हुआ होगा ना, परचेज हुआ है ये component to bank, 45 lakh, right? I hope this is clear to all of you, my dear friends.
Yes, sir.
Is that clear? Absolutely clear?
Yes, sir.
And how my new chart will look like? In the beginning of the 7th year? कैसा दिखेगा ये आपका फिक्स एसेट रजिस्टर के अंदर? In the fixed asset register, how this chart will look like in your fixed asset register? In your fixed asset register, Your turbine component will come at 45 lakh. Okay. This accumulated depreciation 0. Why 0? Because this is replaced at the end of the 6th year. This is a new turbine. Okay. And your other than turbine value will what? This value will be 60 lakh 42, right? And this is your depreciation, what is there? And your total gross block of turbine will become 11,142. This is your accumulated depreciation. This is your net block. Is that clear? Yeah. So breakup of machinery at the beginning of 7th year. At the beginning of 7th year, right? 7th year. ये दिखेगा. I hope it is completely clear now. Yes? How the working has to happen, how the solution needs to be made. Is that clear, Geeta, Saminathan? Any doubt?
No doubt, sir. Very clear.
Clear, sir.
Okay. Very much clear? Okay.
Very much, sir.
Yes.
Yes. Now let's move to another question. Shall we move to another question?
Yes, please, sir.
Question number 1 we have completed. Then let's go to question number. Just allow me a minute. Question number 2, yes. X Limited started construction on a building for its own use on 1st April 2000. Okay. The following costs are incurred. So this question is on measurement. Okay. The first question was on recognition of initial cost and subsequent cost. The first question was testing you on the recognition of subsequent cost, component accounting, split of depreciation. This second question is checking the measurement part. Okay. X Limited started construction on a building for its own use on 1st April 20x0. The following costs are incurred. Purchase price of the land. Geeta, whether this purchase price will be capitalized or it will be charged to P&L. Land purchase price.
Capitalize, sir.
Capitalize. It is a part of PP, capitalize. Stamp duty and legal fee. Capitalize or part of P&L?
Capitalized.
Capitalized. It will also be capitalized. Okay. So you remember the concept of cost of PP? What are the three major buckets which are going to be capitalized as a part of the PP? Number 1. What determines the cost of PP? Number 1. Purchase price plus import duty, if any, plus non-refundable taxes minus trade discount and rebate. Bucket number 1. Bucket number 2. Plus directly attributable cost. So what is meant by directly attributable cost? Number 1. If that asset would not have been there, this cost would not have been there. What does it mean? So Geeta, if you are not doing CA final, if you are not preparing for CA, will you come to this class? Of course, no.
Yes.
Of course, no. Right? Since you are pursuing your CA, you want to become a chartered accountant, and that's why you came to this class. Correct? So if that asset would not have been there, this expense would not have been there. That is number 1. Okay. Number 2, that expense is also important. Why? To bring the asset in a location or condition for making it available for use. Right? These are the 2 concepts of directly attributable cost. What could be directly attributable cost? For example, installation cost, training cost, site preparation cost, transportation cost, carriage inward, freight inward, right? These could be the example of directly attributable cost plus decommissioning cost, right? Decommissioning cost. Okay, that is also an example. That is also a bucket of cost of the PPE, cost of the fixed asset. So purchase price is a purchase price, stamp duty and legal fee. This is also going to be capitalized as a directly attributable cost. Architect fee, whether it will be capitalized or not capitalized. Architect fee.
Yes, sir. We need to capitalize.
Yes. Site preparation. Yes.
Yes.
Now material, direct labor, general overhead. So there is a general overhead also. Whether general overhead is going to be capitalized. General overhead.
No,
No,
sir.
no, sir. We will not capitalize.
General overhead will not be capitalized. Yes. So general overhead cost is not going to be capitalized, right? General overhead cost is not going to be capitalized. So in this table, we understood, but we have not solved the question right now, right? Step by step, we are thinking, we are discussing, and we are concluding, okay, this has to be capitalized, this should not be capitalized. So you are saying general overhead should not be capitalized and the rest of the items should be capitalized, right? That's what you are saying, Saminathan?
Yes, sir. Yes, sir.
Okay,
Perfectly.
okay. Now, the question is not yet completed. The question has given you some other information also. What is that other information? Material costing. So what is the total value of the material? 10 lakh rupee. Material costing 1 lakh rupee had been spoiled and therefore wasted, and a further 1,50,000 was spent on account of faulty design work. Right. As a result of these problems, work on the building was stopped for 2 weeks during November 2000, and it is estimated that 22,000 of the labor costs relate to that period. What does it mean? इसका क्या मतलब है? What is the meaning of this? The total material cost is 10 lakh rupee, which this company has incurred. And 1 lakh rupee of material costing 1 lakh rupee had been spoiled and therefore wasted. And a further 1.5 lakh was spent on account of faulty design work on the material. So is it a normal loss or is it an abnormal loss?
Sir, it is a abnormal loss.
Friends, India 16 says that if there is an abnormal loss, it is not required to be capitalized. It has to be expensed off in the P&L. What does it mean? For example, the company was constructing its factory. Construction के लिए क्या चाहिए होता है? Cement. Correct? For construction, cement bags are required, cement is required. And in remote areas, or even not only in remote areas, even in urban areas also, when a construction site was there, there was a theft which normally happening for what? For which item? Cement bags. 100 cement bags were stored at a place, 5 cement bags were stolen. Okay. So friends, is it a normal loss or is it abnormal loss? It is abnormal loss, right? So standard says that abnormal loss is required to be expensed off in the P&L. So Geeta, 1 lakh plus 1.5 lakh, total 2.5 lakh. Whether this 2.5 lakh out of 10 lakh means whether this 10 lakh completely has to be capitalized or 10 lakh minus 2.5 lakh has to be capitalized.
10 minus 2.5 lakhs.
10 minus 2.5. This 10 was the complete value. Okay. It includes 2.5 lakh. So your capitalization will be 10 minus 2.5. Now the next part. The problem, work on the building is stopped for 2 weeks and it is estimated that 22,000 of the labor costs relate to that period. Means there is a abnormal labor cost also. There is a wastage of the labor cost also. These labor were sitting idle for 2 weeks and the company has incurred 22,000 rupees of expense. So whether this entire 4 lakh needs to be capitalized or 4 lakh minus 22,000 needs to be capitalized.
4 lakh minus 22.
So where this 2.5 lakh and 22,000 will go?
In profit and loss
In
account.
profit and loss account, right? Very good. Very good. Okay. So then the building was completed on 1st January 2001 and brought into use on 1st April 2001, right? So this building was completed on 1st January 2001 and was brought into use on 1st April 2001. After how many months? This building was brought into use after how many months?
4 months.
After 3 months. January, February, March, 1st April को use में आ गया.
Yes, sir.
Right?
3
After
months.
3 months. This building was brought to use after 3 months. Okay. Now, X Limited. So, but building was completed. Building was completed in 1st January and brought in use on 1st April. Brought in use means put to use, right? Started using on 1st April. So what we should do for 3 months? Okay, X Limited has also taken a loan of 40 lakh on 1st April 2000 for construction of the building. This company has also taken a loan of 40 lakh on the construction of building. The loan carried an interest rate of 8% per annum and is repayable on 1st April 2002. Assume that the entity did not consider the construction period as substantial period of time as per Ind AS 23. Friends, what we should do for this interest cost which was there on the loan? This loan was taken on 1st April 2000 when the construction of the building was started. And this building was completed on 1st January 2001 and brought into use on 1st April 2001. What do you think? What we should do? What we should do? When this question came in exam, I must say 50 to 60% of the students has made a mistake in this section. Saminathan, what we should do? So we should capitalize the interest or not?
Sir, as per Ind AS 23 borrowing cost, when there is a condition is there, when we do include in the capital, when the substantial period condition should be missed. Here, they did not consider the construction period as a substantial period, which means this interest is need not to be capitalized. It has to be expensed.
Absolutely, yes. So borrowing cost is incurred. So borrowing cost will become part of your cost of the asset when there is a qualifying asset, right? So borrowing cost will become part of the cost of the asset in case of a qualifying asset, okay? In case of acquisition, construction and production of a qualifying asset. And what is a qualifying asset? Qualifying asset are those assets which takes substantial period of time for getting ready for intended use or sale, right? The question itself clears you that this period of construction is not considered as a substantial period. So if the period of construction is not considered as a substantial period, then of course you are not going to capitalize. You are not going to capitalize it. Okay? You are not going to capitalize the interest cost. Is that clear?
Yes, sir. And one more point, the substantial period. What is substantial period is not defined in that in
Yes.
AS 23 as well.
Yes, substantial period is not defined in Ind AS 23 also. So Geeta, in this case, whatever interest we are paying, the entire interest will go where?
Profit and loss account, sir.
Yes. So the interest cost even during the period of construction will go in the profit and loss account. Now question is asking, calculate the cost of the building that will be included in the tangible non-current asset as an addition, right? So we have already discussed Do you want me to also write all these things in Excel file? What is capitalized, what is not capitalized? Yeah, we
No
have
need.
already covered.
No, sir, no
So
need.
quickly, I will read this solution while we have already covered. Only those costs which are directly attributable to bringing the asset into working condition for its intended use should be included. Administration and general cost cannot be included, right? Standard prohibits. We discussed now, general overheads we have not included, correct? Cost of abnormal amount of wasted material or labor or other resources is also not included as per paragraph 22 of Ind AS 16. Sir, do we need to remember all the paragraph of all the Ind AS? Whether the rank holder number 1, 2, 3, whether they have written all the paragraph number of all the Ind AS in all the question? What's your view?
No, sir. Remembering India's number itself sometimes is confusing.
Not required. It is not an income tax act where you are required to write a section, right? So you are not required to write any paragraph number of any Ind AS, okay? Then here the cost of spoiled material and full faulty design are assumed to be normal abnormal cost. We have already discussed. That is why we have deducted 2.5 lakh 22,000. Also, it is assumed that the wastages and labor charges incurred are abnormal in nature. Hence, same are also not included in the cost of property, plant and equipment. Amount to be included in PPE, purchase price complete, stamp duty and legal fee completely, architect fee completely, site preparation completely, right? Material 2.5 lakh we have reduced. Labor 22,000 we have reduced. General overheads we have not taken. Interest we have not taken. So this the total is 4578, which is going to be capitalized. Is that right, Geeta?
Yes, sir, clear, sir.
Clear? Are you able to remember the concept also? What was the concept in India 16? Yeah?
No, sir, this interest part I didn't know.
Yeah. But now, after solving this question and after explaining the concept also, now you're able to understand the concept,
Yes,
retain
yes,
the concept, right?
yes, sir.
So we are also discussing the concept and we are also solving the question, right? Now let's go to another question. Yes, question number 4. An entity has a nuclear power plant. Nuclear power plant. Have you seen a movie on this nuclear bomb? Have you seen a movie? So where the nuclear bomb testing was done in India? It was in Pokhran in Rajasthan, right?
Yes,
Yes.
sir.
An entity has a nuclear power plant and a related decommissioning liability. Okay. The nuclear power plant started operating on 1st April 20x1. Whenever, right? What is meant by decommissioning liability? So, Geeta, have you heard about this concept in Ind AS 16 and Ind AS 37? Decommissioning liability?
Sir, don't remember, sir.
So, decommissioning liability. Decommissioning liability means, for example, if you are doing some construction on some leasehold land, okay, I acquired a leasehold land for 30 years. So I got a land on a lease basis for 30 years. After 30 years, what will happen? After 30 years, I have to leave from that premises, right? I have to return the land to the lessor. But what happened? I got the land on a lease basis for 30 years and I constructed building on that land. I constructed building on that land. Friends, there is a condition, there is a agreement with the lessor that whenever my lease period will expire, I will return the land in the same condition in which I have received it from you. So Geeta, when I got the land, this land was a simple plain land parcel. But I did some construction on that land. I constructed a building and I used that building for 30 years. Now, what will happen after 30 years? The contract says that I have to return the land in the same condition in which the lessor has given it to me. What should I do? I would have capitalized that land also. The building also. The land was the leasehold land, but the building is mine building. So building is my money which I have invested in that building. So friends, in that case, after 30 years, I have to deinstall, I have to decommission that building, right? I have to remove that building, I have to decommission that building, and I have to restore the land in the same condition in which the lessor has given it to me. There is a cost which is associated, right? So when I'm capitalizing the cost of the building, what I should do, of course, whatever cost I have incurred, purchase price plus import duty plus non-refundable taxes minus trade discount and rebate, I have to do all those stuff. Plus directly attributable cost, I need to add plus provision for decommissioning, the best estimate of decommissioning cost, I am also required to add, right? For example, sitting today, when I am recapitalizing my building, after 30 years, I would have to incur a cost of decommissioning also. The cost of removal of building, decommissioning of building, restoration of land. So those costs I need to incur because I have constructed the building today. So as per Ind AS 16, those costs are also required to be capitalized as a part of the cost of the PPE. So Geeta, I would request you on all the standard where you are not able to remember the concept, please refer the full classes on those standard, right? Because because in one class, two standards, complex questions are required to be revised, right? And this is for so many students because these are the live classes of ICAI, okay? So, and the concept was taught in two complete classes. Means this India 16 was taught in 6 hours. So you can understand every bucket of this cost has been explained in detail with the help of lot many examples. Okay. So if you attend those classes, if you will listen those classes, you will be able to retain your concept. Okay. So, but just as a revisionary class, just to explain you the concept, you are required to dismantle your building, decommission your building, restore the land because you have entered into a agreement today, right? That you have to give the land in the same condition and you have constructed a building today. So that is why standard says that provision for decommissioning, site restoration, deinstallation, these all are required to be capitalized as a part of the cost of PPE. Okay. So entity has a nuclear power plant and a related decommissioning liability. Nuclear power plant started operating on 1st April 2001. The plant has a useful life of 40 years. The plant has a useful life of 40 years. Okay. What is the life? 40 years. Its initial cost was 1,20,000, which included an amount for decommissioning cost of rupees 10,000, which represented 70,400 in estimated cash flows payable in 40 years, discounted at a risk adjusted rate of 5%. My God, what is this sentence? Saminathan, what is this sentence? I'm not able to understand this sentence. I understood the first sentence which talks about there is a power plant and a decommissioning liability. Means after 40 years, the company has to decommission this power plant. And the starting date was given and the useful life is 40 years. And its initial cost was 1,20,000. I understood this part also. but I haven't understood which included an amount of decommissioning cost of 10,000. So in this 120, 10,000 cost of decommissioning is included. So the total cost was 120, including 10,000 of decommissioning cost, I understood. But what is the meaning of this line, Saminathan, which represented 70,400 in estimated cash flows payable in 40 years, discounted at a rate of 5%? Saminathan, have you understood this line? I haven't understood. Hmm.
Actually, there is a flows in 40 years, discounted at the risk-free adjusted of 5%. It is 70,400 we need to pay in addition to that decommissioning cost.
No. So basically, Saminathan, while I have understood this sentence, okay. So what it talks about, it says that after 40 years, after 40 years, so when this nuclear power plant require decommissioning, when this nuclear power plant has to be removed, has to be decommissioned. So at that point of time, the estimated cash flow we are expecting today is how much? 70,400. हम आज कह रहे हैं कि 40 साल के बाद 70,400 रुपए खर्च होंगे. Today we are saying that after 40 years, our estimated cash outflow on account of decommissioning of this power plant will be 70,400. If after 40 years 70,400 needs to be expensed off, needs to be out, needs to be paid. So whether the value of 70,400 after 40 year will be same as of today. Geeta?
No, sir.
Of course, no. If I have to deposit 70,400, which I will be needing after 40 year, should I deposit 70,400 only today?
No.
No. If my fixed deposit, I am depositing some money in State Bank of India, and I'm telling State Bank of India that, listen, Mr. Bank, I will need 70,400 after 40 years. So bank told, listen, my rate is 5%. I will give you 5% interest. Okay. So today, if you will invest 10,000 rupee in fixed deposit, then you will get 70,400 after 40 years. Right? Means the 70,400 which is going to be outflown after 40 years, the present value is 10,000. Right? This is what it is saying at a discount rate of 5%. The entity's financial year ends on 31st March. After 10 years, the net present value of the decommissioning liability has decreased by 8,000 rupees. After 10 years. So this is a best estimate. So today I am estimating what will be my outflow after 40 years. What will be my outflow after 40 years, right? So after 10 years, the net present value of the decommissioning liability has decreased by 8,000 rupees. So when we arrive at 10 years, when we completed 10 years, we found that after 40 years, means 30 years are yet to go. The payment should not be required as 70,400. The payment which will be required is 70,400 minus 8,000, means कितना चाहिए? कितना चाहिए होगा? 62,400, right? It's an estimate. So what we have estimated that after 40 year, whatever we have estimated in the beginning, and when we crossed 10 years, so we found that due to advancement in technology, due to XYZ reason, so now my estimated outflow is not 7,400, it is 62,400, right? The discount rate has not yet changed. There is no change in discount rate. Examine how the entity will account for the above changes in decommissioning liability in the 11th year if it adopts the cost model. What we should do? What we should do? I am taking a pause for 30 seconds. Think of this question and let me know what is the solution. Let me know what is the solution. बताइए इसका क्या solution?
Sir,
Yes. Yes, Aminathan.
sir, in this case, the total cost is 1,20,000 rupees, which include 10,000 rupees as a decommissioning cost. The
Yes.
decommissioning, which involves the 70,400 is the future value. The 10,000 rupees is the present value. So we have to do the unwinding of the interest, the 5% on the 10,000 rupees on year by year up to 10th year, so that we can see 10,000 plus every year the unwinding will be there. First, initially we will be recognizing 1,20,000. The 10,000 will be the decommissioning provision we will create separately. 1,10,000, totally 1,20,000 is that asset value. Out of which 1,10,000 is the initial cost. It will go to the bank, and 10,000 we will create the provision. In that we will add the 5% interest, unwinding of interest on year over year up to 10th year. Then we will see what is the value. In after the 11th year, that 8,000 rupees will decrease in the present value. Then whatever the balance is there, then again we will start the unwinding of 5% interest until the 40th year. Then we will reach the amount. This is what
in this question there is a catch, right? You know, I said that instead of 70,400, now the liability will be 62,400, right?
okay.
So that was not right. What I was telling you, that was not right.
That 8,000 has to be done on the 11th year only. After the 10th year, the present
If you
value of
see, yes. So, you know, that will be hold good. Normally the question, the explanation which I have given you, that my liability after 40 year is not 70,400, is 62,400. Generally, the question comes like that only. But here, if you see, after 10 years, the net present value of the decommissioning liability. What is net present value of the decommissioning liability? Means it is not talking about the final outflow. It is talking about the net present value at the end of the 10 year. This has decreased by 8,000. No change in discount rate. I need to talk about how the above change in decommissioning liability in the 11th year has to be entertained. Friends. Okay. So let me solve this question on the Excel file, right? What was the question number?
4.
Question number 4. Question number 4 of Word file. Okay. Total cost of asset. What is the total cost of asset?
1,20,000.
1,20,000. Right? Decommissioning cost.
10,000.
10,000. Already included in the cost of assets, right? So this is the initial decommissioning cost, means this is the present value of 70,400 at the beginning of the first year, correct? Right, Geeta?
Yes, sir.
Discount rate given in the question is 5%. Okay? 5%, correct? So this is what given in the question. And at the end of 10th year, the decommissioning liability at the end of the 10th year, the decommissioning liability is
8,000.
Re-
reduced. The
reduced by
decommissioning at the end of 10th year, the NPV, the net present value, means it is talking about the value at the end of the 10th year, right? Of decommissioning liability is reduced by 8,000. Is reduced by 8,000, right? Now I need to talk about the accounting treatment. What will be my treatment of this 8,000 reduction? What is my closing carrying value also? Correct? So
yes, sir. Useful
first
life
of
is 40 year.
sorry,
Useful life is 40 year.
useful life is 40 years. Yes, very good. Useful life is 40 years. Useful life is 40 years. So both of you are going to appear in this exam in January.
Yes, sir.
What
Sir.
about you? What about you, Geeta?
Yes, sir.
Okay. Then I will suggest you guys, please aim for 100 marks in financial reporting. I'm not kidding. If you aim for 100 marks, you will be able to secure at least 80-85 marks. Definitely. Spent. So from today, you have at least 40 days, right? Spend at least 3 to 4 hours in your revision, in your concepts. And believe me, you will be able to crack this. And at least try to optimize your time and your performance. For example, when you read Ind AS 16, so many concepts of Ind AS 40 are related to Ind AS 16. Many concept of Ind AS 38 is related to Ind AS 16. Ind AS 23 concepts will also cover when you read Ind AS 16. Okay. So Ind AS 105. Okay. Ind AS 105 is also covering some concepts relating to Ind AS 16. So friends, you can club many standards, and whenever you are reading one standard, it will help you in other standard also. Ind AS 16, 38, 40, 105, 23. Okay. So 36, like these 6-7 standards. If you see this 6-7 standard, this 6-7 standard covers almost 20 marks in your exam. And believe me, I don't know whether you have completed your syllabus, right? At least one time, if you have completed your syllabus, if you have done the revision, little bit even. So in just 2 days, in maximum 2 days, you can cover these 6 standards, 6 to 7 standards, right? So you can secure your 20 marks, at least 20 to 25 marks, you can secure in your FR paper. So try to revise the standard in a group manner. Like when you are reading Ind AS 16, it is not only Ind AS 16, you are reading 70-80% of Ind AS 38 also. You are reading around 60-70% of 40 also. 50% of 105 also. So try to relate the standards with each other. जब आप इंडेक्स 38 पढ़ोगे तो इंडेक्स 16 का फिर से रिवीजन हो रहा होगा. 16 पढ़ रहे हो तो 38 का भी रिवीजन हो रहा है. Okay, cost model, revaluation model, these are the same thing. WDV, SLM, these are the same thing. Initial recognition, measurement, right? So try to optimize these things. Okay, this will really help you. So कहते हैं ना एक तीर से दो शिकार, right? So this is what you guys need to do. Okay, so do more and more revision. Do more. This is a scoring subject. You won't believe this is a scoring subject. And this is kind of a subject which will help you for a lifetime. let's say audit. You are a chartered accountant. You went to financial reporting. You went to, some other. So even you are reading audit and you are in audit. So what you will audit? Your audit of financial statement. How will you audit the financial statement? You have to see the compliance of Ind AS, right? So this Indian accounting standard will help you always. If you join a audit department, if you join a financial reporting department of any listed entity, right? If you join FP&A department, if you join business finance, if you join any analytical department, you always require your financial statement. Financial statement are the basic for anything. And for financial statement, you need Ind AS, right, Geeta?
So thank you, sir. Guidance.
So basically, you have to be very robust on your FR paper. You have to do a lot of revision. Try to, first of all, there are 39 Ind AS. Yes. So try to cut down. So your preparation should be prioritized. Okay. For example, insurance contract standard is not in your syllabus. So out of 39 standard, 3 4 standards are not in your syllabus. Remove that. So probably you have 34 35 standard. Now categorize those standard in A category and B category. Okay. All these asset based standards are extremely important. Okay. So just have a strong preparation on at least 90 or 80% of the standards. Right. For example, out of this 7 standard, whatever come, I will be able to crack it. Okay. So this is how you will be able to achieve 70 to 80 marks in FR paper. 70 to 80 marks. And this is not only for cracking your exam, this is for your lifetime as a professional as well. Okay. All right. So give your best shot. Give your best shot. Right. Only 40 days, 40 to 45 days are yours. Right. Give your best preparation. The concept, the subject where you are not comfortable, do more and more practice. You will start loving that subject. When I was student, I was scared of geography and history. So one fine day, I wake up in the morning at 4:30 because my mother told that if you will revise, learn in the morning, you will be able to retain it easily. So for 7 days, I did this, and you won't believe. So I started loving that subject, and I scored good marks in that subject where I was about to on the verge of the failure. So do that because you have to become a chartered accountant. You will be able to crack it. Do that. Okay. Yeah. Now let's come back to this question. At the end of 10th year, the NPV of the decommissioning liability is reduced by 8,000. Friends, the original value of decommissioning liability when this PP was capitalized, it was 10,000. So at the end of 10 years, still it will be 10,000? No.
No, sir. No, sir.
Its value must be increased. Why? Because because of because of because this is the present
Be- be-
value from 10,000. So this 10,000 is the discounted value of 70,400. So when 10,000 will go closer to 40 year, this 10,000 has to become a 70,400. So every year the interest part has to be added, right? So for example, at the 0 year, so at the beginning, at the initial recognition. What is the value? Value is 10,000, right? At the initial recognition, your value of decommissioning liability is value of decommissioning liability is 10,000. Now, year 1, 2, 3, 4, what you are required to do? You have to add an interest. So this is your opening balance, and then you have to factor interest, right? So value of decommissioning liability, and it is your year 1 year 10. Okay. So opening balance, interest, closing balance. Closing balance. What is my interest, Geeta? 10,000 multiplied by 5%. What is my closing balance at the end of the first year? 10,500. What is my opening balance in the beginning of the second year? 10,500. What is my interest? 5% of 10,005 here. This is my closing balance. This will become my opening balance, right? This is how your calculation will go, right? 16,300 to 89, rounded off to 16,300, right? So what is your closing balance at the end of 6 year? What is your closing balance? This is your closing balance, but this closing balance has been reduced by what amount?
We need to reduce by 8,000 rupees.
It is reduced by 8,000.
8,000.
Right? So after 10 years, this is reduced by 8,000 rupees. From 16,300, it become 8,300. It become 8,300, right? So if I round off to hundreds to nearest hundred, it is coming at 16,300 rupees, right? 16,300. So my net present value is reduced by 8,000. What should I do? This is my liability balance. Provision for decommissioning liability. Liability. Account debit. Right? Liability account debit. So इसको मैं debit करूंगा. What I should credit? What I should credit? This 8,000 I'll debit, but what I should credit to? To what? Friends, first of all, whatever liability will be debited, your asset will be credited. But provided, do you have the asset balance at the end of the 10th year? So I need to check that. Do I have the asset balance? What is the closing balance of my asset? What is the closing balance of my asset? What is my cost of the asset at which I have capitalized the asset?
1,20,000.
1,20,000. What is the accumulated depreciation at the end of the 10th year? Accumulated depreciation. Geeta, what is the accumulated depreciation at the end of 10th year? भाई कितना होगा? 120 divided by what is the useful life?
40. So 3,000.
Multiply by 10, 30,000.
30,000.
30,000. What is my net block? What is my net block? My net block is how much? मेरा net block क्या होगा? Net value. So net block, or let's say my net carrying value, or WDV. My closing value. Closing value. What is my closing value? What is my net value?
90,000.
120 minus 30. So I have the balance, right? I have 90,000 rupees of balance in my asset account. So what I should do? I should debit my decommissioning liability and I should credit my to asset. I have good balance in my asset, right? So now, what is my closing value of asset at the end of 10th year? What will be my closing value of the asset at the end of 10th year? 120 minus 30 minus 8, 82,000. And what is my closing value of liability? Closing value of decommissioning liability. What is my closing value of decommissioning liability at the end of 10th year?
8,300. 16,300 minus 8,000.
16,300 minus 8,000, right? Minus 8,000. Is that clear, Geeta?
Yes, sir.
Completely clear? Yes.
Yes,
Okay.
sir.
Yes, sir. From 11th year, the depreciation will change on the 82,000 divided
Of course.
by remaining period, that 30 years.
Yes. So your interest cost will be charged on decommissioning liability at 8,000 rupees, sorry, 8,300 rupees, and your depreciation is also going to be charged on 82,000 rupees divided by remaining life. Remaining life is 30 years, right? So what is my, let's write this also. Depreciation for 11th year. What will be the depreciation for 11th? So my depreciation for 11th year is equal to 82,000 divided by 30 divided by 30. 2733. This
Yeah.
will be my 11th year depreciation, right? Means my opening balance of asset need to be depreciated over the remaining life, that is 82,000 over 30 years. Okay, clear? 82,000 over 30 years. And what is my interest cost on decommissioning liability for 11th year? Gita, how much is the interest cost? So 8,300 multiplied by 5%, 450,
1,000.
right? Is that clear? Yeah. Okay, so friends, we completed question number 4 also. Now let's move to another question. This is what the answer is written here. On 31st March 11, the plant is 10 years old. Accumulated depreciation is 30,000. Due to unwinding of discount, the amount of decommissioning liability has increased from 10,000 to 16,300. On 31st March 11, discount rate has not changed. However, the entity estimate that as a result of technological advancement. Here the question is silent. They have written कि technological advancement की वजह से NPV has decreased to 8,000 rupees, decreased by 8,000 rupees. Accordingly, the entity adjusts the decommissioning liability from 16,300 to 8,300. On this date, the entity passes the following journal entry: provision for decommissioning liability debit to asset account. Following this adjustment, the carrying amount of the asset is 82,000, which will be depreciated over the remaining 30 years of the asset's life, giving a depreciation expense for the next year of this much. The next year finance cost for unwinding of discount will be 415. Okay. Yes, clear?
Yes, sir.
Sir, very much
Absolutely
clear.
clear or not clear?
Clear, sir. But initially, the understanding the question was a bit tricky actually. Now it's very clear.
Yes. So now let's move to another question. Question number 6. A shipping company is required by law to bring all ships into dry dock every 5 years for a major inspection and overhaul, right? So earlier the concept was major replacement. Now it is a major inspection and overhaul. So Index 16 talks about if there is a major replacement, major overhaul, major inspection and overhaul, major replacement that is required to be
Component accounting.
capitalized. That is
Capitalized.
a component. The new component that is required to be capitalized separately. The new component, if there is any major inspection overhaul, that is required to be capitalized, and the old component requires to be decapitalized, right? So, and this shipping company is required by law to bring all ships in the dry dock every 5 years for major inspection and overhaul. So in every 5 years, there is a major inspection and major overhaul. Okay. Overhaul expenditure might at first sight seems to be a repair to ships, but it is actually a cost incurred in getting the ship back into a seaworthy condition. Sorry, I think I was on mute. Were you able to listen me? Yeah. So in every 5 year for a major inspection and overhaul expenditure might at first sight seems to be a repair to ships. Overall expenditure might at first sight seemingly to be a repair to ships, but it is actually a cost incurred in getting the ship back into a seaworthy condition. Okay. But it is actually a cost incurred in getting the ship back into a seaworthy condition. So at the first sight, it was looking like it is a repair and maintenance expenditure, simple, but this cost is actually required. So seemingly at the first sight ऐसा लग रहा था repair and maintenance का खर्चा है, but it is a important cost which is required for getting the ship back into a seaworthy condition. Okay. As such, the cost must be capitalized. Standard has given you the hint also. Standard नहीं बता question नहीं बता दिया. Okay, so far from the first paragraph, we got only two information. Information number one, the life of this major inspection and overall is 5 year. Why? Because every 5 year, this activity has to be repeated. Number two, this activity is a major activity and this cost is required to be capitalized. Okay, very good. If this question would have been silent, even though India 16 says that major inspection, major component, major overhaul requires to be capitalized. A ship which costs 20 million with a 20-year life must have major overhaul every 5 years. फिर क्या बोला? A ship which costs 20 million, right? 20 million. What is the cost of the ship? 20 million, 2 crore rupees. What is the life of the ship? 20 year. Must have major overhaul every 5 years. वो तो हमने ऊपर पढ़ ही लिया, ठीक है? टोटल शिप की लाइफ है 20 years. मीन्स अपनी पूरी लाइफ में it is required to be inspected how many times? At the end of every 5 years. Okay. The estimated overall cost at the 5 year point is 5 million. The estimated cost is also given 5 million. It is a major component. The total value of the ship is 20 million. When the company is acquiring ship, of course it is well inspected, right? The inspection will come only after 5 years. जब नया शिप होगा तो ट्राइड टेस्टेड इंस्पेक्टेड होगा ना, करेक्ट? Now the question demands you compute depreciation charge for 10-year period. What is the depreciation charge for 10-year period? Friends, tell me what will the depreciation for first year? क्या होगा depreciation?
1 million.
How you have arrived at 1 million?
20 million divided by 1.
20 million divided by 20.
20, yes, sir.
So just tell me one thing, Geeta. After reading this question and this question came in exam, do you think the expectation of the question is just 20 divided by 20? Don't you think there is something where this ship has one component also, which is major inspection and overhaul? The total life of the ship is 20 years, right? But one component, which is major inspection and overhaul, it has only a life of 5 years. Means today I bought a ship at 20 million. This ship has already inspected. This is already inspected. When I will complete 5 years, I have to incur a cost of 5 million also, right?
Yes, sir.
So don't you think I need to componentize, I need to break this ship into component? For major inspection and overhaul, the life is 5 year. For remainder of the ship, means other than major inspection and overhaul, the life is 20 year. Don't you think that?
Sir, like first question, yes.
Yeah. This is what this question is asking, and this question wants to test you guys, right? यही तो क्वेश्चन आपसे पूछना चाहता है. Correct? This is the demand of the question. Okay? This is the only demand of the question, na? So friends, in this case, my total cost is 20 million. So my overall component, my major inspection and overall component is 5 million. It is given. Then what is my value of the ship other than the overall component? 15 million, because
Million.
total is my 20 million. So what is the life of this major component? 20 year or 5 year?
5 years.
So when I divide 5 divided by 5, so I will get a per annum depreciation of 1 year. When I divide 15 divided by 20, I will get a depreciation of 0.75 million. So Geeta, whether my depreciation per year is 1.75 or 1 million? It is 1.75 million. It is 1.75 million, right? So total accumulated depreciation for the first 5 years will be how much? 1.75 multiplied by 5. And the carrying amount of the ship at the end of 5 year will be 11.25 million. वो कैसे आया? कैसे आया वो? 20 minus 8.75. ये जो ओवरऑल कंपोनेंट है 5 मिलियन का, वो 5 साल के बाद उसका वैल्यू क्या होगा? 0. और 15 मिलियन की वैल्यू कितनी होगी? 15 मिलियन माइनस 15 by 20 multiply by 5, right? So it will be 11.25 million. Okay, now assuming, now this question is talking about 5 million of the overall cost only. If again the cost is the new inspection cost, when you reach at the end of the 5 year, जब आप 5 year के end में पहुंचे, your initial component of the inspection and overhaul has become 0, and now the new component cost is 5 million only. So you will capitalize 5 million and your old component has already been depreciated at 0. Correct?
Sir.
Saminathan, is that okay?
Yes, sir. Fine, sir. Perfectly fine.
Yeah, Geeta, is that okay?
Sir, clear, sir.
So Geeta, tell me one thing. At the end of 5 year, let's say instead of 5 million, if the new component cost means major inspection and overall cost, if this would have incurred at 6 million, then 6 million has to be capitalized. हमने 45 लाख भी तो कैपिटलाइज किया था न्यू टरबाइन में.
हाँ सर.
वो तो जो भी कॉस्ट होगी वो कैपिटलाइज कर देंगे. सिंपल. So this is what this answer is telling you. So this answer is telling you that assuming instead of 5 million, at the end of 5 year, the new cost incurred is 6 million. So this amount will now be capitalized to the cost of the ship to give a carrying amount of 17.25 million, being 11.25 million plus 6 million. तो कैसे दिखेगा आपको? 6 million आपका overall component cost, 11.25 million carrying value of the other than this component, right? This 11.25 has to be depreciated over the remaining life of 15 years, and this 6 million has to be depreciated over the life of 5 years. So 1.2 and 0.75. Okay, so this will be your year 6 to 10 depreciation. Sir, what happens if it will be 5? अगर ये 5 होगा तो ये 1 हो जाएगा. Simple. Correct? Right?
Yes, sir.
Okay. Yes. So this is your answer. This will be your depreciation. Have you understood this part?
Yes, sir. In this,
Very
there
well.
is no discount. Yes, sir. Discount is not there, and after 5 years, nil is की हो जाएगी. Yes, sir. Thank you, sir.
Yeah.
Sir,
So now,
actually, one doubt on this question. It is assumed as a 6 million from the 6th year, but in the question is silent. We can continue the next
5,
5 terms.
yes, yes,
Five.
yes, you're absolutely right, Saminathan. Yes. So you can continue with 5 million only, right?
Yes,
But
sir.
you have to write that we
Assumption.
in absence of the information about the new inspection and overall cost, we are assuming the same cost to be incurred at the end of 5 year also,
Yes, sir. Thank you.
right? And that is the ideal situation, I would say.
Yes, sir. Rather than the increasing or decreasing value,
Yes,
continue the
yes,
same. Yeah.
yes, exactly. So, friends, let's have a break for 10 to 12 minutes, right? It's 8:35 now. We'll start at around 8:46. Okay, thanks. Yes, so we discussed question number 6. We discussed question number, let me see. So we covered question number 1. We covered question number 2. We covered question number 4. We covered question number 6 also, right? Friends, question number 5, let's cover quickly. Heaven Limited had purchased a machinery on 1st April 2001 for 30 lakh, which is reflected in the books at WDV of 17 lakh 50,000 on 1st April 2006. Okay. So 30 lakh rupee is the cost. WDV after 5 years is 1750. How much is the accumulated depreciation?
12 lakh 50,000.
12 lakh 50,000. Okay. So how much was the depreciation per annum? If in 5 years the total depreciation is 1750, what is the per unit depreciation, per year depreciation?
2 lakh 50,000.
2 lakh 50,000. Very good. Okay. So this is just we are calculating in our mind. Don't know what is the benefit of that, but we understood cost 30 lakh. After 5 years, 1750 is the WDV, means 1250 is the cost, means probably we would have charged 2 lakh 50,000 per annum. Okay. The company has estimated an upward revaluation of 10% on 1st April 6 to arrive at the fair value of the asset. Okay. So company has done a revaluation, understood, which is upward revaluation of 10%. Heaven Limited availed the option given by Ind AS of transferring some of the surplus as asset is used by an enterprise. Okay, what is this? Are you aware what this line is talking about? Any idea? Any idea about this line? Geeta, any idea?
No, sir, not aware.
Saminathan, any idea?
Sir, here they are talking about that towards the upward revaluation, that definitely the extra additional depreciation will be there.
See,
There,
yeah, Saminathan, please continue.
that additional depreciation, there is a option is there. They can transfer to that retained earning every year.
You are absolutely right.
Otherwise, the end of that disposal also they can at this stage they can do it.
Yes. So there is a concept in Ind AS 16. And what is that concept? It says that if the company has opted for revaluation model and there is a revaluation surplus, that revaluation surplus has to be go to other comprehensive income, right? It is a separate reserve, revaluation reserve. Now, if there is a revaluation reserve, how this revaluation reserve will become zero? How this revaluation reserve will be nullified? So, what are the utilization of revaluation reserve? Ind AS 16 says that revaluation reserve can be utilized in two ways. Way number 1, when you are disposing the asset on which you have created a revaluation reserve. For example, you have done a upward revaluation of a building and there was a 10 lakh rupee of revaluation reserve. So when you sold the building, whatever revaluation reserve is there in your reserves and surplus, you can transfer that revaluation reserve to retained earning directly. That is number 1. Number 2, you can also utilize your revaluation reserve during the life of the asset. Like mentioned by Saminathan, that when you have done the revaluation, your value of the asset has gone up. If your value of asset has gone up, your depreciation expense will also go up, right? If there was a asset which was 20 lakh rupees, now it become 25 lakh rupee. Earlier you were charging depreciation on 20 lakh. Now going forward, you will charge depreciation on 25 lakh. Friends, Earlier, the depreciation was assuming 2 lakh rupee. Now the depreciation become 2.5 lakh rupee. Ind AS 16 says that if you have an extra depreciation just because of this revaluation, to the extent of extra depreciation every year, like in this case, earlier 2 lakh depreciation, now 2.5 lakh depreciation. So this 50,000 is extra depreciation, additional depreciation. So to the extent of 50,000 every year, you can transfer your revaluation reserve to retained earnings every year, right? This is a concept which is there in Ind AS 16. We have covered this concept in detail in our regular class, okay? In our regular session on Ind AS 16, right? So friends, this is what it is telling you, that this company availed the option given by Ind AS 16 of transferring some of the surplus as the asset is used by the entity to the extent of additional depreciation. Then on 1st April 2008, the machinery was revalued downward by 15%. And the company also re-estimated the machinery remaining life to be 8 years. This question is very tricky question, very complex also. The question looks like a very small question, simple question, but it requires a lot of care and caution, okay? On 1st April 2008 means after 2 years. The machinery was revalued downward by 15%, and the company also re-estimated the machine's remaining life to be 8 years. Okay. So the useful life is not given in this question. But here it is saying that the company has re-estimated the machine remaining life to be 8 year, remaining life to be 8 year. And when? On 1st April 2008. Okay, let's see. And tell me if there is a revaluation reserve which is available and there is a revaluation loss, then what will happen? First, whatever is your subsequent revaluation loss, that has to be adjusted from the available revaluation reserve. And what happened if your revaluation loss is more than the available revaluation reserve? Then Geeta, then what will happen? If your revaluation loss is more than the available revaluation surplus, Geeta, then what will happen? That loss will go to P&L. Loss will go to the profit and loss. Okay?
So,
Yeah. So then on 31st March 2010, so after 2 years, the machine was sold for 935. That company charged depreciation on straight line method. So one information is very useful in this case. The company charges depreciation on straight line method. Okay. Means if I know the depreciation, if I know the accumulated depreciation, I can find out my per annum depreciation. I can find out my life. Prepare machinery account in the books of the company over its useful life to record the above transactions, right? So this machinery was purchased on 1st April 2001. Then the cost was given. After 5 years, the WDV is given. There is an upward revaluation on 1st April 2006, which is given. The company is transferring revaluation reserve to P&L, to retained earning to the extent of extra depreciation. This machine was having a downward revaluation by 15%, and the company also re-estimated the useful life, right? Then after 2 years, this machine was sold for 935. Depreciation is charged on straight line method. We are required to prepare machinery account to record all the above transactions. Friends, 2-3 concepts are very important to solve this question. Number 1, understanding of treatment of revaluation surplus. Number 2, understanding of depreciation. What is the understanding on revaluation surplus? So whenever the company opts for revaluation model, whatever is revaluation surplus, it will go to the separate reserve as a OCI. Whenever the company has a revaluation loss, the company will adjust, the company will recoup the revaluation loss from the available revaluation reserve. If still there is a revaluation loss which is more than the revaluation reserve, the remaining loss will go to P&L. Number two, if a company has a revaluation reserve, that revaluation reserve is utilized in two ways. Way number one, revaluation reserve has to be transferred to retained earning when the asset is derecognized, asset is sold out. Number two, to the extent of additional depreciation, the revaluation reserve has to be transferred to the retained earning every year, right? So these are the concept. If you guys are aware, you will be able to solve this question easily. Now, coming to the machinery account, right? So I have purchased my machine on 1st April 2001. If you see, I have purchased my machinery on 1st April 2001. Okay. Yes. So this machine was purchased on 1st April 2001 for 30 lakh to bank account. By depreciation, 2.5 lakh. Geeta, do you aware from where this depreciation of 2.5 lakh has come?
Yes, sir. 2,50,000 we have counted.
You remember cost was 30, WDV after 5 year was 1750, accumulated depreciation was 1250. Then the period was 5 year, 1250 divided by 5, 2,50,000. We
Yes, sir.
calculated the depreciation. So closing balance at the end of the first year is this one. Now coming to the second year. What happened in second year? This closing balance will become your opening balance, right? Your depreciation will be 250. Your closing balance will be 25. So we'll continue this calculation up to 31st March 2006. Same calculation, right? Till this level, the information are already given. Correct?
Sir, I have one question here. They used to arrive at the 17 lakh 50,000 as per the WDV, which means the opening balance, then percentage will be there, then it is reduced. It is a WDV method. But we are using as a straight line.
So Saminathan, they are saying that written down value is this much.
Okay.
WDV is this much does not mean the WDV method has adopted, and that is why, but they also understood that the student will get confused, and that is why they have also put a line at the end. See,
Okay,
what is the
okay.
line?
Straight
They have
line method.
clarified.
Yeah, consider that also. Yeah, even then I have small doubt. I want to clarify that with you.
Yeah. So they have also clarified the company charges depreciation on SLN, right? So then on 1st April 2006, what happened? The value was 1750. You all are aware this 1750? It is given in the question. Then there was
Yes,
a
sir, perfect.
10% of upward revaluation. So what is 10% of 1750? 175. What is the accounting entry? Asset account debit, machinery account debit to revaluation reserve account 1.75. Now, what will be the depreciation in that year? What will be the depreciation in that year? Tell me. How
Sir,
you will arrive at a depreciation?
Sir, here there was in the question there is a ambiguity, there is a silent. Actually, from 1st April 2008 only the remaining period is 8 years, which means on 1st April 2006 there is a 2 years, which means 10 years was there. Then from 17 lakh 50,000 we have to put divided by 10 years. The 2 years we can arrive, I believe. Am I right, sir?
You are
Sir?
not right. You are not right, Saminathan. So let me explain you, right? Saminathan,
I,
Saminathan, this is not a question. These are the real life situation. Okay. So sitting on 1st April 2006, since you are living in 2025, you are solving a question, you have a complete question, right? But when you are a chartered accountant, when you are a professional, one thing you should always keep in your mind is whatever calculations you are making for any period, just stick to that period only. Saminathan, on 1st April 2006, forget about the remaining part of the question. Am I aware about what is my remaining useful life?
No, sir, it is not aware. But the
Right?
17 lakh 50,000, yeah.
Stay here. But you can find out your estimated useful life when you capitalize this asset on 1st April 2001. Of course, you started depreciating the asset, correct? And you had charged your depreciation for 5 years, 12,50,000. So cost was 30 lakh. In the last 5 years, you have charged a depreciation of 2.5 lakh every year. If my method is straight line method, my per annum depreciation is 2.5 lakh. My total cost is 30 lakh. Geeta, what is my useful life? Can I calculate my useful life?
Yes, sir, we can calculate. It's a 12 years.
It's a 12 year simple. 30
So,
lakh is the cost.
cost.
Every year you have to charge 2.5 lakh. 30 lakh divided by 2.5 lakh. How much you will get? 12 years? सिंपल है ना.
Yes,
30
sir.
लाख में से अगर 2.5 लाख रुपए का
Yes, sir.
डेप्रीसिएशन हर साल लगाना है तो कितने साल में 30 लाख रुपए पूरे होंगे? 12 साल में.
Son.
Right? And Geeta, how much year has already been completed? 1st April 1 to 1st April 6?
5 years.
So Geeta, what is the remaining years? 7 years.
Yes, yes, sir.
7 years. So in this question, my remaining year is 7 years. So sitting on 1st April 2006, what is my total value? 19 lakh 25,000 is my total value. What is my remaining useful life?
7 years divided
7
by
years.
7.
7 years. 2,75,000, right? 1925 divided by 7 will give you 2,75,000. Let's go
Yes.
to the working note number 2. If you see the working note number 2, depreciation after upward revaluation as on 1st April 2006. In working note number 1, you can see the depreciation charge in 5 years is 1250 per unit depreciation 2.5, remaining useful life 1750 divided by 257 years, total useful life 12 years. Then your value as on 1st April 6, 1750, 10% revaluation 175, total value 1925. Then your depreciation is 1925 divided by 7, 2,75,000, right? So 2,75,000 is your depreciation. Is that clear?
Depreciation. Yes, sir.
Yes, sir.
Yeah. So what is my 31st March 7 closing balance? 1925 minus 275. This will become your opening balance on 1st April 7. Then again you will charge depreciation of 275, right? So this will be your closing balance. Now the opening balance on 1st April 2008 is 1375. Now there is a downward revaluation. And how much is the downward revaluation?
15%.
15% of 1375. 15% of 1375. What is 15% of 1375?
It's a 2,06,250.
2,06,250. Now, I have some revaluation reserve available. I have created a revaluation reserve of 175, right? And my revaluation loss is 2,06,250. So whatever revaluation reserve is available to me, I will adjust from the revaluation reserve. Correct?
Yes, sir.
Sir.
So shall I adjust out of 2,06,250? Shall I adjust 175 from the revaluation reserve?
No, sir. The
Why no,
reason is
Geeta?
that we
So
are
Saminathan, just hold on. Geeta, should I adjust entire 175 from the loss of 2,06,250 or what should I do? There was a line which was given. And what was that line in the question? It says that the revaluation reserve has to be transferred every year to the extent of extra depreciation to the retained earnings, right? So now I need to compute what is my available revaluation reserve. Working note number 4. Friends, what is my downward revaluation? 2,06,250. So how much is my amount transferred from revaluation reserve? 175. 175. What is my remaining useful life? 7 years. Means every year, because of this revaluation of 175, the depreciation cost has increased by 25,000. So in 2 years, the company has transferred the revaluation reserve to retained earning to the extent of total of 50,000. In the last 2 years, 6, 7 and 7, 8, the company has debited revaluation reserve and credited retained earning. So the balance of revaluation reserve which is available is only 1,25,000. What is my downward revaluation? My impairment loss, my revaluation loss, it is 2,06,250. So what entry I need to pass? I need to pass revaluation reserve account debit 1,25,000 to asset credit, because asset value has gone down, to asset credit 2,06,250. The remaining 81,250 will go to P&L debit, right? Will go to P&L. Is that clear? Is that clear or not clear?
Yes, sir, clear.
This is
But
the accounting entry. So this is what we have done. By revaluation reserve 125, by P&L 81,250, because the asset has been credited by 2,06,250. Now, what is my depreciation? Working note number 3. What is my depreciation in this year? 1st April 2008. So book value on 1st April 2008 was 1375. 15% downward revaluation. Revalued amount is this much. And this divide by remaining years, which is given as 8 years. So this will be your depreciation. This will be your depreciation on the basis of revised useful life. So when you go step by step, you will be able to get the answer. And at the end, what will happen? You have sold this asset at 935. Okay. Whatever is the closing value of machinery you have credited, and then you have got a balancing figure as a profit. Will you be able to solve this question completely now?
yes, sir.
Yes. Okay. The only thing is you have to be well versed about the concept first. So friends, thank you so much. So we have covered out of 6 questions, we have solved 5 questions from Ind AS 16 questions bank, which is given by ICAI. Now friends, I am moving to Ind AS 23. Okay. I am moving to Ind AS 23. Okay. Right? And we have also touched upon the concept of initial recognition of PPE, which is future economic benefit is probable cost can be measured reliably. Then subsequent cost recognition का भी same criteria है. We have also talked about major inspection, overhauls and major replacement. We also talked about the measurement of PPE at cost. Cost includes purchase price plus non-refundable taxes plus import duty minus trade discount and rebates plus directly attributable cost plus estimated cost of decommissioning and dismantling, right? We also covered a question on decommissioning. We also covered a question on major replacement and major inspection and overhauls. We also covered a concept on revaluation model. We also discussed what is the treatment of revaluation model, right? We also covered a question on depreciation, right? So we also covered a question on measurement. So we covered these 5 questions, and with the help of 5 questions, you must be able to understand the nuances of Ind AS 16. This is not a complete class. This is a revisionary class. And of course, if you are not remember the concept, you have to see the full session on Ind AS 16, right? Friends, allow me a minute. I am sharing my screen on Ind AS 23. Okay. So just allow me a minute. Just a minute. Yes. Yeah. Friends, India's 23 borrowing cost. Then I hope my screen is visible to everyone. Is
Yes,
it
sir.
visible?
Yes.
Yes, sir.
Yeah, yeah.
Yes, sir. Little bit zoom it, sir, please.
Is it okay now? Yes. So friends, India's 23 borrowing cost. If I talk about borrowing cost, it's a small, short and sweet standard. Borrowing cost generally, as the name suggests, it is like, it is a P&L item. It is a P&L item. But if I talk about borrowing cost to be specifically covered in a standard, so what was the intent? And this borrowing cost is nothing. It's a asset related standard. Means this borrowing cost is something which become part of the cost of the asset, right? And when it become part of the cost of the asset, for example, Saminathan, you have purchased a flat, constructed flat, and you took a loan. You know home loan? You guys must be heard about home loan, have
Yes,
seen
sir.
home loan, right?
Yes. Yes,
So
sir.
you purchased a constructed flat, already built flat from a builder. You went to builder, builder has shown you the flat, you liked the flat. You asked what is the price, builder told the price is 50 lakh rupees. So you took a home loan from State Bank of India and through loan you purchased a house, okay? You purchased a flat. Will you capitalize the interest on loan to your flat, to your building? Answer is
Yes,
no.
sir.
Just hold
No,
on.
no.
So you purchase the flat, okay, and you started using that flat. Number two, second situation. You purchase a land and you want to construct a flat, you want to construct a building. And for the purpose of construction of a building, you took a loan from State Bank of India for 50 lakh rupees. And now you started construction. And the construction took almost 1.5 years. In that case, will you capitalize the interest on loan to your building?
Yes, sir. Will capitalize.
Yes. So in both the cases, I got the building, I got the flat. But in the first case, I was not capitalizing. In the second case, I was capitalizing, right? So if you look at what is common in both the case, what is common? I got the house, I got the building, I got the flat. Second, even though I'm capitalizing in the second case, but I'm capitalizing up to which date? अगर मैंने लोन 20 years के लिए लिया है, so Geeta, if I have taken a home loan for 20 years and I'm using this house, so whether every year I will capitalize this interest to my house, to my flat, to my building? Answer is no. So there is a criteria. So you are capitalizing your interest cost, your borrowing cost only till the date when the asset is available for use, when the asset is ready for use. Right? So in the first case, Saminathan, in the first case, why you have not capitalized?
Because directly used to.
Because the moment you acquire the asset, it is available for use. When you took the home loan, when you took the loan, that asset was already available for use. And in the second case, when you took the home loan was taken for bringing the asset into the usable condition. The asset was not available for use. And if you see, while in this case we have capitalized, but we have not capitalized for a lifetime interest. What we have capitalized? We have capitalized only for 18 months till the time the building is ready for use. The building become available for use. तो पहले केस में तो पहले से ही अवेलेबल फॉर यूज थी तो नहीं किया आगे का. दूसरे केस में किया कैपिटलाइज, बट कब तक का किया? जब तक वो अवेलेबल फॉर यूज नहीं हो गई, राइट? मतलब अवेलेबल फॉर यूज होने तक किया. Okay, is that clear? So friends, in the language of the borrowing cost, The second situation is known as a qualifying asset, means WIP asset. And the first situation is known as an asset. Is that clear?
Yes, sir.
Clear
Clear,
in
sir.
mind or clear from mind?
Clear in mind.
Fine, sir. Thank you.
Clear in mind, right? So friends, so this standard covers the concept of capitalization of the borrowing cost, means cost of borrowing, in relation to an item of a fixed asset only up to the time when that asset is available for use, right? Once the asset become available for use, the loan is still there, you are still paying interest. In that case, what you are required to do? In that case, the interest will go to P&L once the asset becomes available for use, right? So friends, let me discuss one or two questions. This is a very small standard. If you see the standard, if you basically read this standard, it will take hardly 1 hour or 2 hours. If you solve the question from study material, right, it will take another 1 or 2 hours. So you will be able to have a great command on this standard within 1 hour, right? So friends, in this standard, there is a concept of weighted average interest rate, as well as there is a concept of what? Weighted average interest rate or simple interest rate, right? General borrowing and specific borrowing, right? For example, if there is a one asset and you have taken a one borrowing, which rate of interest you will use for capitalization?
That is specific interest rate.
Specific interest rate on specific borrowing. But you have a large pool. You have procured your funds from various sources. From Allahabad Bank, you have taken a loan at 8%. From debentures, you have raised at 9%. From State Bank of India, you have acquired at 6%. Right? From the various sources, you have procured your, your finance. Right? You procured your finance from various sources. And now you have a pool of money, right? So from one bank you acquired 50 crore, from another bank you have acquired 20 crore, from debenture you raised 30 crore, and 100 crore you put in a bank. Out of 100 crore, will you be able to identify which currency belongs to loan from which bank? Money has no color.
No, no, sir.
पता है ना आपको? So money has no caste, no religion, no color, no boundaries. So if you put your hands, get the 500 rupees currency, can you tell me it is from Allahabad Bank, it is from debenture, it is from State Bank? Geeta? Money has no color, right? So in this case, what you will do, and what you have done, out of 100 crore, you spent 50 crore in an asset, in construction of an asset. So in that case, standard says that in that case, what you will do, in that case, you have to find out your weighted average cost, weighted average rate of capitalization, right? So you need to apply that weighted average interest rate to find out your cost of capitalization. Okay. To discuss this question number one, an entity constructs a new head office building commencing on 1st September 2001, which continues till 31st December 2001. 1st September to 31st December, 4 months. Directly attributable expenditure at the beginning of the month on this asset are 1 lakh rupee in September and 2.5 lakh in each of the month of October to December, right? And each of the month October to December, okay? Directly attributable expenditure at the beginning of the month on this asset are 1 lakh in September and 2.5 lakh in each of the month of October to December. So basically, while doing this construction of a building, the company has spent 1 lakh in September and 2.5 lakh every month from October to December. The entity has not taken any specific borrowing to finance the construction of the asset, but has incurred finance cost on its general borrowing during the construction period. During the year, the company had issued 10% debenture with a face value of 20 lakh. So this 20 lakh rupee of fund is at which rate? 10%. Is at 10%. Okay. And the company has a OD facility also, 5 lakh ki, which increased to 7.5 lakh in December. So from September to November, this entity has a OD facility of 5 lakh. And from December, this has a 7.5 lakh rupees of OD facility, right? Interest was paid on the OD at 15% until 1st October. Then the rate was increased to 16%. Okay. And the rate of interest is also different. Interest was paid on the overdraft at 15% until 1st October. Then the rate was increased to 16%. Right. So 15% rate was up to what? 1st October. Then in November, December, October, November, December, it increased to 16%. Right. Calculate the capitalization rate for computation of borrowing costs in accordance with India's 23 borrowing costs. Right. So friends, in this case, we need to compute that what is my cost of borrowing which is going to be capitalized for the month of September, October, November, December, right? Right? So you're only concerned about your period of construction. Since the entity has only general borrowing, hence first step is to compute the capitalization rate. The capitalization rate of the general borrowing of the entity during the period of construction is calculated as follows. Finance cost 20 lakh rupees. Your finance cost on 20 lakh rupee of debenture. So 20 lakh debenture are at 10%. So what is your, if it is at 10%, what is your per annum interest cost?
2 lakhs.
2 lakh. And then what is your 4-month interest cost?
Divided by 4.
2 lakh divided by 12 multiplied by
666, sir.
4, right? Correct. Then your interest at the rate of 15% on overdraft of 5 lakh in September, right? So till 1st October, the rate was 15%. So means for the month of September, the rate is 15%. So 5 lakh multiplied by 15% into 1 divided by 12, it will give you 6250. Okay. Then 16% interest on overdraft of 5 lakh for October to November. Why I haven't choose December? Because in December, the OD facility was increased to 7.5 lakh, right? So 5 lakh multiplied by 16%, multiply by 2 divided by 12. It will give you 13,333. Then interest at the rate of 16% on 7.5 lakh for December. It will come out at 10,000 rupees. How this has been arrived? 7.5 lakh multiplied by 16% into 1 divided by 12. So this is your total finance cost. This is your total finance cost. 96,250. Right? So friends, what is your total finance cost during September to December? Total finance cost during September to December is 96,250. Total finance cost. I'm not saying the finance cost which is going to be capitalized. I'm not saying that. Are you getting me? So what I did, there are 20 lakh rupees of debentures which are there. And there is a 5 lakh rupee of OD facility which is increased to 7.5 lakh. So what is my total OD facility? 7.5 lakh. 5 का ही तो 7.5 हो गया ना, मतलब 2.5 और ऐड हो गया. Correct? So tell me, what is my, on 31st December, what is my total borrowing? 27.5 lakh is my total borrowing, right?
Yes, sir.
But
20 lakhs plus 7 lakh 50,000.
plus 7,50,000. But
Yes.
how much I have spent on construction? How much I have spent on construction? 1 lakh in
8 lakh
September.
50,000.
8,50,000. Yes, 1 lakh in September and 2.5 lakh in the month of October to December. So total 8.5 lakh, right? So my total borrowing is 27.5 lakh. My spent on this, spent on the asset is 8.5 lakh, right? So that entire money taken from the loan, I haven't spent on the asset. Okay. So my total finance cost during the period of construction during 4-year period is 96,250. Now what is my weighted average borrowing? So 20,000 multiplied by 4 plus 5 lakh multiplied by 3 plus this is plus, इसके बीच में एक plus आएगा, plus 7.5 lakh multiplied by 1 total divide by 4. Okay, this will give you the weighted average value of the borrowing 25,62500. When you divide total finance cost during the construction period divide by weighted average borrowing during the construction period, it will give you the interest rate of 3.756%. 3.756%. And how will you compute the borrowing cost to be capitalized? कैसे करेंगे? ये इंटरेस्ट तो आ गया, बोरोइंग कॉस्ट टू बी कैपिटलाइज कैसे निकालोगे?
Yes, sir. We have spent it in the different bucket in the different month. 1 lakh for 4 months into
Yes.
3.756%, 2,50,000 3 months.
Yes.
So into 3 point like that we have to do that.
Yes. So basically, whenever you have spent, assuming you have spent on the first day of every month. So for 1 lakh, you have to charge an interest for 4 months, right? For 2.5 lakh, interest of 3 months till the date of completion, right? Likewise, you have to compute your borrowing cost. Okay, right? So this is how we have computed your weighted average capitalization rate, which is capitalization rate, and we'll apply this capitalization rate on the spent. Okay, this is how we will get the borrowing cost to be capitalized. Is that clear?
Yes, sir.
Clear or
Yes.
clear? Clear in mind or clear from mind? Clear in
mind,
mind.
sir.
Okay, yes. So now let me take you to another question. Just a minute. Just a minute. Yes. So let's see this question. Question number 3. Yes. Nikita Limited has obtained a term loan of 620 lakhs for a complete renovation and modernization of its factory on 1st April 2001. So this company has taken a loan of 6 crore 20 lakhs on 1st April 2001. Okay. Plant and machinery was acquired under the modernization scheme and installation was completed on 30th April 2002. Okay. So this plant and machinery was acquired under modernization scheme and installation was completed on 30th April 2002. This loan was taken on 1st April 2001. Okay. So this company has acquired a plant and machinery and this company is doing the entire renovation. Okay. And from 1st April 2001, it was completed on 30th April 2002, means in 1 year, 1 month. An expenditure of 510 lakhs out of 620 lakhs, 5 crore 10 lakh was incurred on the installation of plant and machinery. 54 lakh has been advanced. 510 plus 54, 564 has been advanced to supplier for additional assets acquired on 25th April 2001, which were also installed on 30th April 2002, right? And the balance loan of 56 lakh has been used for working capital purposes. So 510 lakh is on the installation of plant and machinery. 54 lakh has been given to supplier for some additional assets, which was acquired on 25th April, but installed on 30th April. And the balance loan of 56 lakh has been used for working capital purpose. Management of Nikita Limited consider the 12-month period as a substantial period of time to get the asset ready for intended use. The company has paid a total interest of 68.2 lakhs during the financial year 2001-2 on the above loan. So when this company has When this company has taken this loan? कंपनी ने लोन कब लिया?
1st April 2001.
1st April 2001, the company has taken a loan. Okay. And when the company has acquired the factory? 1st April 2001, यही लिखा है ना?
Yes,
And
sir.
modernization of its factory on 1st April 2001, and this was acquired under the modernization scheme. Okay. So 1st April 2001 से लोन लिया, वहीं से काम स्टार्ट किया. And in 1-2 means 31st March 2. This factory was completed on when? In the next financial year, 30th April 2, right?
Yes, sir.
The accountant seeks your advice how to account for the interest paid in the books of accounts. Will your answer be different if the whole process of renovation and modernization gets completed on 28th February 2002? So two questions in this case. Question number 1. Whatever interest you have paid during the year 2001-2, right? How will you account for this interest? Will you capitalize? Will you charge off to the P&L? So how will you do that? Question number 2, it is saying that what happened instead of 30th April 2002, if this entire plant and machinery got completed, the entire process of renovation and modernization got completed in 28th February 2002, then what will happen? Then whether your answer would be different. This is what this question demands. Friends, tell me, what should be the answer? Tell me, क्या होना चाहिए?
Yes, sir. On the first case, we have to capitalize, sir. 510 is used for expense and 54 lakhs also we used for additional purchase. For that portion, interest we need to capitalize. Since that substantial period is they determined as a 12 months. See, now in this case, is a 13 months. So we are eligible to capitalize. For working capital use, we will not capitalize that portion.
So tell
On
me
the
one
point,
thing. Tell me
yes,
one thing. Is it a qualifying asset in this case? Because if asset is not qualifying asset, then you are not going to capitalize the interest.
yes, sir,
Whether
it
the
is a
asset is a qualifying asset.
yes, sir, it is asset is a qualifying asset. That
Why?
because the substantial period is within more than 12 months. They mentioned as a 12 months period as a substantial
So
period.
question has mentioned a
Yes,
substantial period of time is 12 months. And in this case, it is 13 months, right?
yes, sir.
It is more than 12 months, and hence this asset is a qualifying asset. And if this asset
Yes,
is a
sir.
qualifying asset, then you need to capitalize the interest cost on the amount which is spent on the acquisition, construction, and production of qualifying asset, right?
Yes,
ठीक है ना?
sir.
Correct? Yes.
Yes,
So,
sir.
in first case, it is a qualifying asset. We'll talk later on, but in the first case, it is a qualifying asset. What happens in the second case if this entire modernization and renovation would have been completed by 28th February 2002 then?
Then it is not a qualified asset because it's 11 month only. It's not exceeding 12 months or more. The qualifying asset that the substantial period condition is not met.
Yes.
Hence,
So,
hence that following cost cannot be capitalized.
so the second case is very simple. If it is completed by 28th February 2002, doesn't matter whatever interest you have paid during the financial year 1-2, which is 68.2 lakhs. The entire money has to be charged to the P&L. The entire interest cost has to be charged to the P&L. So the second case is very simple. But in the first case, you have taken a borrowing of 620 lakhs on day 1, right? You have paid an interest of 68.2 lakhs for the year. Now question comes, what is the treatment of 68.2 lakhs in the year 1-2, in the financial year 1-2, right? So on 31st March 2, this entire factory is work in progress. This entire capital work in progress because the factory has completed on 30th April in the next financial year. So the question is out of 68.2, whether entire 68.2 will be capitalized or 68.2 entire 68.2 should not have been capitalized. It has to be broken into two parts, something in P&L and something needs to be capitalized. How it will be? Friends, if you see this question,
Sir, I think
yeah, Saminathan.
I think yeah, it's a specific borrowing. I think that the entire amount can be the whatever the amount is used for it, it can be capitalized.
So if you see this question, see, when we talk about borrowing cost, we are only talking about the money which is spent on the acquisition, construction, production of a qualifying asset, right? If I taken a loan for maintaining my working capital, if I taken a loan for paying my employee salaries, paying my rent, will it be capitalized? Interest will be capitalized.
No, sir.
The salary, rent, the working capital, managing operations. So these expenses are charged as an expenses. And then how come if you have taken a loan and paying and meeting those expenses, how come that interest is going to be capitalized? If the underlying amount for which you have taken the loan for paying those underlying amount, if those underlying amount nature is a P&L nature, how come that interest will be capitalized? So friends, in this case, the key point here is out of 620 lakhs, 510 lakh is on a factory building, on a factory plant and machinery. 54 lakh is on additional plant and machinery, and the remaining 56 lakh is for working capital purpose, right? So this remaining 56 lakh, which is for working capital purpose, so the interest pertaining to 56 lakh will go to P&L, and the interest pertaining to 510 and 54 will be capitalized. Now the question is, sir, here we know the total amount of loan, which is 620. Here we know the total interest. We don't know the rate. So simple, you can compute the rate. How can you compute this? Simple, total loan is 620 lakhs. Total interest is 68.2 lakh. Correct. तो क्या करोगे आप? 68.2 मल्टीप्लाई बाय 510 डिवाइड बाय 620, तो ये आपका इंटरेस्ट आ गया 56.10. 54 लाख का जो एडिशनल एसेट है उस पे कैसे कैलकुलेट करोगे? 68.2 मल्टीप्लाई बाय 54 डिवाइड बाय 620, इट विल गिव यू 5.94, राइट? So friends, if you see the purpose of the asset on the modernization of and renovation of plant and machinery, it's a qualifying asset. And what is your interest to be capitalized? 68.2 multiplied by 510 divided by 620, 56 lakh interest is going to be capitalized. Advance to supplier for additional asset, it is also a qualifying asset. 68.2 multiplied by 54 divided by 620, 6 lakh rupee is also going to be capitalized. Working capital is not a qualifying asset. So on 56 lakh, it is 68.2 multiplied by 56 divided by 620. This will go to P&L. So out of 68.2 lakhs, 62.04 lakh will be capitalized. 6.16 lakh will go to P&L, right? What happened when construction of asset is completed by 28 February? So when the process of renovation gets completed in less than 12 months, the plant and machinery and the additional asset will not be considered as a qualifying asset until and unless the entity specifically considers that the asset took substantial period for completing their construction. Accordingly, the whole of interest will be charged off or expensed off to the profit and loss account. Is that clear?
Yes,
Is
sir.
that
Clear,
clear?
sir.
Yes,
Yeah.
sir.
So these are the concepts on your borrowing cost. Friends, are you aware about the concept of are you aware about the concept of initiation of capitalization, cessation of capitalization? Are you aware about those concepts? So the
Yes, sir.
date, what is the commencement date of capitalization? For example, if we have taken a loan, but we have not spent our money, I mean to say we have taken a loan, but we haven't purchased the asset. Will we start capitalizing the interest? क्या होगा?
No, sir.
Why no?
Because the expenses to be incurred, expenses not incurred, hence we cannot capitalize.
Friends, so whenever you see the capitalization, so you have to see from which date the capitalization of borrowing cost, capitalization of interest cost will start from which date, right? And for that, you need to look at the commencement date of capitalization. And what is a commencement date? Commencement date is a date when three conditions will meet. Number one, the loan has been taken. Okay. Number two, the asset has been acquired. Number three, the activities necessary to prepare the asset. The activities necessary to prepare the asset has been started. For example, you have taken a loan from State Bank of India on 1st January, right? On 1st January. Then you acquired a land on 1st of March and you started taking approvals, sanctions, construction, for example, on 1st of June. So you took a loan on 1st of January, your interest has started. But asset was acquired on 1st March. The activity was started on 1st June. So from which date interest cost is going to be capitalized? Your interest cost capitalization will start from 1st June when all three conditions will meet. So Geeta, what will happen for interest cost from 1st January to 31st May?
Goes to P&L.
It goes to P&L. And from 1st June till the time of completion of the asset, it will be capitalized. So this is known as a commencement of capitalization. For example, you are constructing an asset, you are constructing a factory, and there was a labor strike due to which the work has been stopped for 3 months. So whether for this period of 3 months, still the interest cost on the loan has to be capitalized or it will charge to P&L.
Charge to P&Ls.
So standard says that in case of suspension of capitalization, means the period in which the capitalization is suspended, in that period, you are also not required to capitalize the interest. You have to charge your interest to the P&L. Then the last concept is cessation of capitalization. What is meant by cessation of capitalization? Stopping capitalization. What does it mean? Stopping capitalization means when your asset is substantially completed. When your asset is substantially completed, right? For example, you must have seen in school building, the whitewash was going on outside the walls. The whitewash is going on, but the classes started. The classes has already started in the school. Means if the asset is substantially completed, in that case, if the asset is substantially completed, in that case, you are also required to stop the capitalization of borrowing cost, and after that it will go to your P&L. For example, practically, if the school has got the commencement certificate, operational certificate. So in that case, if the school has got the operational certificate, then till the time of the commencement of the operation, interest cost can be capitalized. After that, interest cost will charge to P&L. Doesn't matter. The small work is going on. The horticulture work is going on. The whitewash is going on. Doesn't matter. Right? So it is known as a cessation of capitalization. So friends, we completed Ind AS 16 and Ind AS 23 with 7-8 questions today. Right? I hope you enjoyed the revisionary session. Okay. I would request all of you that please, if you know the concept, these questions will help you in revision. But if you don't know the concept or don't remember the concept, I would urge you to at least attend the regular class, which is already there in the ICAI portal, right? Already there on YouTube. Please listen those classes and then started solving this question. We will upload these files on the portal also. Along with the answer, it will help you, right? And in the answer, the explanations are also there. Okay. I hope you found it useful, right? Any questions, Saminathan or Geeta?
No questions, sir. Thank you so much.
Thank you, sir.
Geeta, I hope you liked this session.
Yes, sir, very much.
Have you
Revised.
understood?
Yes, sir. Yes, sir.
Yeah. Saminathan, what about you?
Yes, sir. Actually, I attended that regular class
Yes.
as well. It's
Yes.
when it's revising, it's very easy and it's a cakewalk for me. Thank you so much. And you also revised the important concept in these two standards, which really helpful. And also you provided the how to prepare the remaining times of 40 days as well in all the things. It's very amazing and useful, sir. Thank you so much for your
Yeah.
tips and the concept clarity. Thank you so
Thank
much.
you. Thank you, everyone. Thank you so much. Okay. Bye. Manish ji? Yeah, session complete. Manish ji. Okay. Thank you. Thank you.